This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices slumped to their lowest in 2 weeks on Thursday after Iran said talks with world powers on its nuclear program would resume by the end of November, and U.S. crude inventories rose by much more than expected. Brent crude was 69 cents, or 0.8%, lower at $83.89 a barrel by 13:25 GMT, having hit a 2-week low of $82.32 earlier and fallen by 2.1% in the previous session. U.S. West Texas Intermediate (WTI) crude was down 53 cents, or 0.6%, at $82.13, having earlier touched a 2-week low of $80.58 and dropped 2.4% on Wednesday.
China's state planner has set an immediate price target for thermal coal in its most direct intervention yet to cool the market for the key power-generating fuel amid a severe power crunch, trading and power firm sources told Reuters. The price target was revealed at meetings on Tuesday and Wednesday between the National Development and Reform Commission, NDRC, and coal miners and distributors, as well as power firms. Chinese coal futures slumped again on Thursday and have nearly halved from a record high on October 19. The top macro planner wants to cap ex-mine pit prices for 5,500 kilocalorie thermal coal at 1,200 yuan, $187.56, a ton, sources said, well below the 1,450 to 1,900 yuan a ton price cited by traders on Wednesday in top coal-producing regions of Inner Mongolia and Shaanxi.
Moving on to the top news in the energy sector.
World leaders attending COP26 climate talks from the end of the month must ratchet up pressure to make shipping decarbonize by 2050, a senior industry official involved in the meeting said. Shipping, which transports about 90% of world trade, accounts for nearly 3% of the world's CO2 emissions. UN shipping agency the International Maritime Organization, IMO, has said it aims to reduce overall greenhouse gas (GHG) emissions from ships by 50% from 2008 levels by 2050. The goal is not aligned with the 2015 Paris Agreement on climate change.
U.S. corn-based ethanol production over the last year or so has been more of a drag than a support on grain markets as demand and world economies continue to claw back from the coronavirus slump. Now, with global energy prices at 7-year highs and gasoline consumption improving, profit margins for U.S. ethanol producers have surged, lifting output near record highs. The risk of strong production is that stockpiles could build excessively without equally robust demand, though so far that has not been the case. An increase in lagging exports could help balance any extended rise in output, though 2 of the United States' top customers have been less active.
Next, we have the top news in metal markets.
Aluminium rebounded from 2-month lows on Thursday as traders refocused on the impact that power restrictions in China will have on energy-intensive smelters producing the metal. Prices plunged on Wednesday after China's state planner said it would step in to cool soaring prices for coal, which powers aluminium smelters, during a severe power crunch. Energy accounts for about 40% of aluminium smelter costs. China's state planner has set an immediate price target for thermal coal in its most direct intervention yet to cool the market for the key power-generating fuel, sources told Reuters.
Gold prices rose on Thursday after data showing the U.S. economy grew at its slowest pace in more than a year boosted demand for the safe haven metal and weakened the dollar. Spot gold rose 0.4% to $1,803.68 per ounce by 11:49 a.m. Eastern Time, 15:49 GMT. U.S. gold futures for December delivery gained 0.4% to $1,805.40 per ounce. Economic growth slowed in the U.S. and that would support the gold market in the perspective that the Federal Reserve would be less likely to either taper asset purchases at a quicker pace or the outlook for higher interest rates would be curtailed, said David Megger, director of metals trading at High Ridge Futures. We will now look at the top news in the agricultural sector. China on Thursday called for the removal of enormous farm subsidies in some developed countries as part of Beijing's push for reform of the World Trade Organization. There are very unfair rules in the agriculture sector, and enormous subsidies some developed country members are entitled to, that severely distort international agricultural trade, Wang Xiaowen, Vice Minister of China's Ministry of Commerce, told a press briefing. Agricultural subsidies allowed for developing countries, however, are capped at 10% of the value of production and have very limited impact on trade, added Wang, yet are vital for ensuring grain supply and food security.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.